If you've been in crypto for any amount of time, you should know better than anyone else that taking profits is one of the hardest things to do. It's not just selling, but it's knowing when to sell crypto. And in this video, I'm going to be sharing 5 free tools that you can use to gauge whether or not a cryptocurrency is becoming overheated, overbought, and it's probably a good time to sell in this video here on More Coin Bureau. My name is Aaron Dishner from The Better Traders, and I'm super excited to share this with you. But before we get started, I have a request for you. Take out a piece of paper, get a pencil, write stuff down. Don't just mindlessly watch a video and not take notes from it. I am giving you a lot of great tips and tools, and I'm also going to be leaving links to all these free tools in the description of this video down below. So let's go ahead and get started first with CoinGlass. For those that are not familiar, CoinGlass is a free cryptocurrency charting indicator, like data resource that you could use. It's similar to Glassnode, except CoinGlass pays more attention to market price action and has lots of other information in regards to futures markets, liquidation levels, all that stuff. But let's just scale things back. Don't worry. I'm going to make this really simple and really easy to understand, because that's the kind of stuff I like to make for you guys. Now, in this video, the first one that we're going to start off with is honestly the easiest. And for all of you that are impatient and you don't want to wait for one of the best possible ways that you could actually time the market yourself at the very end, then by all means, you can click off after this. I am 100% serious. You're going to love this. It's stupid simple, but I do want to tell you that I have a secret one planned at the very end as well. But don't skip ahead. I saw you. Don't do it. Thank you for sticking with me. Now, the Crypto Bitcoin Bull Run Index, which is the CBBI, I mean, they obviously forgot an R there, CBBI. This is a very, very simple looking indicator, but it's actually really powerful because it combines a lot of other indicators and a lot of other metrics to determine when a Bitcoin bull run might be reaching its top or when things have likely bottomed. Again, this is really nice because everything I'm sharing with you, you can use both for a bull market to time the top or a bear market to time the bottom. And if we overlay the price of BTC, we can see this actually did an incredible job. Now, we want to focus more on our current market cycle. So let's just go back over here to look at the 2017 cycle. We saw an incredible run up, and we saw this CBBI shoot all the way up to a massive level of 99.96, right at the top when Bitcoin was at $19,000. What a steal. But at the time, that was the all-time high. Then we saw the price of Bitcoin stabilize at 6K, lose the 6K floor, plummet all the way down to 33.95, and note that the green line rate there was at 4.78. So the beauty of this one simple signal is that we can see when the levels are massively overbought, above 80 or 90 would be overbought, and oversold, which would be below 10, really 20 to 10. But it's great as well to find dip buy opportunities. For example, here's the dip that we saw in March 2020. We saw the little COVID crash that happened. The CBBI plummeted along with the price down to 18.67. So if you needed something back then, well, this didn't exist then, but something back then to give you conviction to buy the dip, this was it. So having something really simple like this really makes it nice. Now, how well did this indicator top, or rather, how do I say this? Identify the top of the previous bull market. Now, a lot of us look at the November 2021 top as the top. But to be honest, many metrics actually point to about March 2021 being the real top. And I'm going to share a little bit more about that in a second, but I just want to show you how well this works. Not only did it let us know that we were losing steam on the second move up in November, but again, did an incredible job of letting us know when the bottom fell out from underneath us, and we saw the CBBI drop down to as low as 2 when Bitcoin was at $16,000. This was an incredible buy the dip signal. Now, how is this looking right now? I am so glad you asked that, because in March 2024, we saw the CBBI shoot up to 80, which is getting near overbought levels, I guess we could say. So this is a sell signal, and it was pretty spot on. Even though the price of Bitcoin has gone up a lot more since this time at $73,000, you have to admit that's a pretty amazing signal. And recently, in December 2024, all the way over here to February, we saw Bitcoin well above $100,000. And again, CBBI hovering at these overbought levels of 80 or more. But have we hit that max euphoria? Have we hit that max sell signal? Not yet, believe it or not. So it's really interesting. And I want to break this down really, really simply. The CBBI index combines 9 key metrics, which could evolve with updates, they say. But it's including but not limited to Bitcoin price trends, including moving average crossovers, which we're actually going to look at next. The MVRV ratio, MVRV standing for market value to realized value ratio. R HODL ratio, which is the realized short-term versus long-term holder ratio. The NUPL, the net unrealized profit and loss metric, and reserve risk. To be honest, I look at MVRV, R HODL, and NUPL separately at least once a week. And the cool thing is that when we look at this indicator, we actually have one that just does it automatically for us, compiling all of those, or rather combining all of those, aggregating all of those powerful signals together in one super metric. I really like the CBBI. But there's something to be said for the power of moving averages. If you've ever used TradingView before, you know that moving averages are one of the easiest ways to gauge the strength of a trend or the weakness thereof. And again, this next one is going to be down and below in the description. This is the 200-week moving average heat map. Now, this is a little bit different than just a simple, straightforward moving average because we have the 200-week down here. It's this red line that you can click right here and remove it if you want to. But what's really great about this, as you can tell, is we have these dots, these bubbles above the price. And this is done every single 30 days or so. So we got December the 22nd, November the 24th, October the 27th or so. So we can see when it starts to change color. And for the most part, this indicator is showing us that it's showing this really dark blue color right here. But when things start to quote unquote heat up, so do the colors. You can see where it was once this dark blue color, now it's more of a greenish color, yellow warming up, orange, and we finally get red when Bitcoin was heading up to $20,000 back in 2017. We can see similar behavior way back here in 2020 as well, where we see this staying blue and then warming up here in 2020 December, warming up a lot and a lot more. And here we are in March with it turning yellow before it cools off again. Now, what's really great about this is that we can tell again with this indicator that really March and April 2021, as far as indicators are concerned, was the top. I know the price topped out in November 2021. But again, we have another indicator agreeing with us that yes, this period in spring 2021 was most likely the top. But here's where things get really interesting. We can use this again for confidence. If we see the price breaking below this 200-week moving average, and it's really far below, because I'm using dark mode right now, and dare I turn on the lights, it might be a little bit blinding. Oh, I hate when that happens. But when we look at the bear market, we can see the color actually changing to this deep purple. So when we're very far below this red 200-week moving average, it actually lets us know this is a buy the dip opportunity, similar to what we saw with the CBBI metric. Now, where are we? You might be wondering that right now, given the fact that we saw some pretty warm colors. Well, the fact of the matter is that we're still very much cold. We haven't hit any overheated levels. I know it's felt overheated, but really compared to past markets, we haven't gotten there yet. So have some confidence. Another really popular metric that we can use to gauge whether the market has topped out or at least hit a temporary top is the Crypto Fear and Greed Index. Now, you've probably seen screenshot this flying around on X, maybe even like a meme version of this where it's down like past zero with a knife and blood on the end. It's basically at dead. But the reality is that the Crypto Fear and Greed Index is a really, really useful metric, kind of similar to CBBI. But this one is a much different purpose in that it lets us know every single day what the meter is saying. Now, I want you to understand a couple of things. When the meter starts to go, and you can see it's divided up here into 5 sections: extreme fear, fear, neutral, greed, extreme greed. These are all separated by about a value of 20. So anything from 20 and below is extreme fear. Anything from 80 and above is extreme greed. Now, here's where things get interesting. Typically in a bull market scenario, which I do believe that we're in right now, when we see the fear and greed index, which is this blue area down here, dip to some extremely oversold levels, where we see the fear and greed index right here down at, I think this says 10. That is obviously super duper extreme fear, very much oversold. Now, did the price of Bitcoin fall lower? Yes, it did. But since it's reached this low in the fear and greed index, it has since come up. When we get these flash crash moments and fear and greed falls all the way down to extreme fear, we can capitulate on that, or capitalize on that, rather, is a better word, to take advantage of that negative price action. So that way, when we get this, when you see it on your news feed, when you see it on X, everyone's saying fear and greed is at 10, fear and greed is at 15. While we could continue to see more downside price action, it's actually a really nice thing to see that, because it's a buy the dip opportunity. And I say that because one thing that's really unique about what they have on CoinGlass is they have this really cool metric right here. Not only is it letting us know what the current fear and greed index rating is, and this is going to fluctuate from fear to greed all the time, but it's letting us know this, I don't know if it's actually this year or if it's 365 days ago up until the current day, but what's really interesting is that it's letting us know in 1 year, we've only seen 8 days that ranked on the extreme fear gauging, and that's 20 and below. Vice versa, we've had 22 days of extreme greed. Now, where we're looking at extreme fear as a buy the dip opportunity, really when we start to see the fear and greed index get at greed, or really up to extreme greed, again, levels above 80, this is a very big sell signal. Now, could the price be going up a lot higher? Absolutely. It could definitely be going up higher. For instance, if you look at the fear and greed index back over here in October, just before the Trump election pump, we saw fear and greed index at 73. It was already well into the greed zone, as you can see right here. And then we start to see the price of Bitcoin take off. And right here on the 22nd of November, we were at an extreme greed level of 94, which is incredible. Now, the price of Bitcoin is at $98,000. It did proceed to go up a lot higher, obviously above $100,000. But this was a great signal letting us know that the market is extremely overbought right now, extremely greedy. We should sell when other people are greedy, and we should be buying when others are fearful. And again, this is what makes it a great metric. Now, while we can get a little bit more fine-tuning in regards to looking at the week or looking at the month and figuring out where are we on average, we can see clearly over the last year, 52% of the time, we're looking at greed. So it's actually been quite bullish, to be honest, over the last year. And I would honestly agree with that looking back at price action. And we're going to be looking at that in a second at the end of the video. You just got to hang in there. I want to just help explain this. Now, if we look at the entire span of Bitcoin's existence, this is much more telling. This helps put this past year into perspective. Because if we know that the last year, 52% of the time, we've been at greed, but we look at the entire metric and its history, we're really only greedy about 25% of the time. Extreme greed only happens 5% of the time. And it's much more common to see neutral fear or extreme fear. So while we do use extreme fear to gauge buy the dip opportunities, it's also important to recognize that when we start to finally see these values of greed or extreme greed, these are great signals to remind us, well, statistically speaking, these are really good sell signals. Now, I'm not saying to sell everything, but this is a really helpful signal. And again, people are very vocal and very loud about this signal when they're sharing it online. Before I continue sharing, I have 3 more. I have a hidden one, a secret one for the very end. But before I do, if you've liked this content so far and you want to see more of this, hit the like button. Leave a comment down below with what you've learned. Your pencil or your pen should be really busy taking notes as I'm sharing all this stuff, okay? So let's keep going. The next one is the bull market peak indicators. This, again, is available for free on CoinGlass. And what's really nice about this is that this is the lazy man's version. If you don't want to look at a squiggly line going up and down, if you don't want to have to interpret fear and greed and figure out, well, is it this or that or the other? One really nice thing about this bull market peak indicator is that it already has these references in store, letting us know, or not in store, but rather pre-configured, so that when these levels meet these conditions, then it is a hit. And this red X will turn probably into a green check mark. Now, right as of the filming of this video, March 20th, 2025, we are not anywhere near a bull market. Now, there is historical data, but that means we'd have to click on this and it will show us this specific chart. It will not show us historical data for the entire thing. And it's not very normal for CoinGlass to only show you that day, but it's interesting, and it's also worth noting that, as of the current time, everything is right now in a hold mode, or basically hodl mode. Now, there are other things that we can use. And for this, I actually want to go over to TradingView. Now, TradingView is one of the best charting platforms you could possibly get your little hands on. And I highly recommend creating an account on TradingView. It is free. You don't need to pay for a subscription on TradingView. There are lots of paid indicators. There are lots of free indicators, and you can even make your own using PineScript. But for the purpose of this video, we're actually using a free indicator called RSI, which stands for the Relative Strength Index. I actually created a video on the Coin Bureau Trading channel, of which I'm a host, that goes into detail how to use RSI to know when to take profit, how to look for entries using RSI, a lot of great stuff. I'm going to make sure to link it at the end of this video. But for now, what I want to help you understand is that RSI is one of the simplest and easiest indicators to use. Now, the way that you add it is you go over here to your indicators, metrics, and strategies, or press the / key, or it's /. Which one is that? I think it's /. Who cares? We're going to hit that. We're going to type in RSI, and Relative Strength Index will pop up. I already have it on my chart right here. RSI. Now, I do use specific settings. Feel free to copy them. I use an RSI length of 7 because statistically speaking, from a lot of backtested data, RSI 7 works much better for crypto instead of the standard or default setting of 14. Now, the way that this works is quite simple. When we start to see RSI at or above 90, that is a really good indication that the market is getting very much toppy. And I'm going to go ahead and draw a horizontal line here just about at 90. I'm going to make this white because that green is just offensive. It's awful. So when we're looking back on price action, we did see RSI at 90 back in March of 2024. And that's when the price of Bitcoin was at a very humble, let's see, the close was at $70,000. It's not bad. But what we really want to find and identify are these moments where the price of Bitcoin hits 90 and we see it just absolutely skyrocket higher. If we look at price action just from back here in the 2020 bull market, we can see that RSI closed at 90 here at the candle close about 29,000, and Bitcoin proceeded to increase by 121% before falling down. If we go back over here to look at the 2017 bull market, we have RSI getting above 90 here, and it keeps going up, actually falls down after moving 107%. You can see RSI goes below that level, and then it shoots right back up to it again for another increase of about 115%. If we go back again, looking at this previous market way back here in 2013, and we look at RSI being overbought, lo and behold, we see quite the increase. Now, this is a much more immature market, so of course the price action is way more exaggerated. And yes, we have one right here, and then that's the market top. But the reality of this is that we can use RSI to gauge when an asset is extremely overbought. And that's what levels or values above 70 represent. Now, when we start to get above 90 or higher, oh man, that's a really strong topping signal. And you'll note that when we look at a very immature market back in 2013, slightly more mature market, kind of a teenager right over here. In 2017, now we're looking at a 20-something. Now we're looking at a much more reserved market where it's not as volatile, not as wildly volatile as it used to be about 10 years ago. We can see that RSI has yet to push above 90 and stay there, which is why I still believe that we are in a bull market. We haven't seen a topping signal yet, in my opinion. I could be wrong, but we're looking across the board. It's not just RSI. And it's not just this bull market peak indicators. It's not just fear and greed. It's not just the 200-week moving average. It's not just the CBBI. We're seeing all of those things telling us, no, we're not there yet. So I'm going to continue to hold to that. And by the way, you'll notice I have other tickers here. This works extremely well on the monthly time frame, and you can use this same concept to figure out when your asset of choice could be extremely overbought and you might want to consider taking profit. For example, we saw Ethereum get pretty overheated here in March as well, topping out at 36.45, which is quite a difference from our current price as of the filming of this video. But back over here in 2020 and 2021, boy, oh boy, was this great. And yes, of course, the price went up higher when it finally peaked out at about 29.51, but it also fell a lot from there in the bear market. Looking at XRP or Ripple, we're seeing, again, similar story. We're seeing RSI on the monthly time frame at a level of 98.84 back over here in 2017, even though the price continued to shoot up a lot higher. The reality is that this is still a great trade, especially if you're looking for a place to take profit. Zooming ahead to 2021, we saw teases here going up 177%, and over here again moving up 180%. But we can see when we start to get above these overbought levels that we need to take caution and take care and make sure we're taking profit on the way up, just like we saw back over here in January 2025. ADA, Cardano. This one got up to some crazy overbought levels in 2021. RSI, monthly RSI was at 97.16, and ADA was all the way up here at $1.32. Did it move up even more from there? Yes. But was that a great place to sell? Yes, it was a good place to sell. And the idea behind this is not to sell everything, but at least take some profits out of the trade, because there's no guarantee that the chart's going to continue to go up and to the right forever. There are no guarantees like that in crypto. Now, for all of you that have stuck around to the very end, I got one more I want to share with you in regards to how you can use RSI, but on a faster time frame. And this is going to be a little bit more advanced, so for all of you traders, pay attention. Going back over here to CoinGlass, there's a really cool tool called the Crypto Market RSI Heatmap. Word salad? You betcha. Does it taste delicious? Oh yeah. So this is really simple. It works the same way as RSI does. And what we're looking at is a different, or rather it's a group category of a ton of coins that you can see over here. And there's different time frames that we can look at. Now, I don't really recommend spending any time looking at the 15-minute time frame or even the hour. This is really only useful, in my opinion, on the weekly time frame. And I'll tell you why. When we're looking at performance across the board for all these cryptocurrencies, and we can see that the average RSI right here is at 38.64, that means that most coins are pretty beaten down and weak. Now, depending on when you're watching this, you're going to be like, well, no duh, Aaron, of course everything is really weak. But there's power in this, because if we can see a lot of coins that are extremely oversold, that creates a very interesting buying opportunity. And it's not always going to be like this. There will be times when the market is all unanimously bullish and people are calling for higher highs and ridiculously overpriced targets. We're going to see a lot of these coins up here in this red zone. So the idea behind this is that when we see the majority of these coins in this weak or massively oversold section, especially on a long time frame like the weekly, that's a signal that we're obviously very bearish and we should be careful about the market conditions. But vice versa, when we see the majority of these tokens at this strong level, which is apparently 60 or really 70 and higher, everything is overbought. That is a very clear signal that we are reaching some sort of local market top. Another really cool thing about this is that while we don't have access to RSI on the weekly here, we can sort by the 24-hour time period. Now, for some reason, ATM just gets stuck up here, but it's okay. But we can just click this and we can sort by coins that are really oversold on the 24-hour time frame or the really overbought, which can help us determine which coins might be worth considering for trading, okay? Now, I shared a ton of content in this video, but the main thing that you need to do is just pick one. Pick one of these different strategies, these different tools, these different resources. to actually take profits. Set a calendar reminder. And a lot of you that are investing in crypto, not necessarily trading like I am, you really need to only check once a week. Now, you're going to get a pulse, a feel for how the market is based off of headlines, based off of X and posts and things like that, euphoria, signs of greed, all that stuff. But the main thing you need to do is stick to your trading plan. Use one of these tools, stick to your trading plan. And part of your trading plan should be knowing when to take some profit. How much are you going to sell? At what prices do you really want to sell? What kind of return are you looking for? Are you satisfied with any amount of profit, or are you trying to hit a magical number of $100,000 at the end of this market? I'm going to tell you, be satisfied with any amount of profit. It works so much better when you've understood that this crypto market gives no promises. There are no guaranteed returns. So when the market is really bullish, take some profit on the way up. Could prices always go higher? Oh yeah, they can go up way higher, just like we saw with XRP and also with Doge. But the truth is that most coins, they're not going to keep going up higher and higher, which is why it's important to take partial profits, take a little bit out when we're starting to see these topping signals, whether it's the CBBI, whether it's RSI, moving average, crypto fear and greed index. Take your pick, but choose one and decide in advance, where are you going to take profit? How much are you going to take out? And when you finally take profits, what are you going to do with them? And keep in mind, for some of you in certain jurisdictions, you might have to pay taxes on that. I know, I hate it too, but you have to be realistic about this stuff, okay? So I've left you with a ton of information. I would love to see what you have to say in the comments section down below. Again, the links to all these resources are in the description of this video. And until the next time, you know what to do. Stay awesome and stay in the green. Peace.